Imagine paying thousands for condo insurance, only to find out you're not actually covered. That's exactly what owners of the Rosarito Beach Condo Hotel in Mexico are now uncovering. They thought the HOA insurance had their back. But in reality, if something happens to the building, they might not see a single cent. Instead, the main beneficiary of that insurance policy. Not the condo owners, but the administrator of the building, the very person trusted to manage it. That same administrator was being paid 10% of a nearly $1 million annual budget. And that's just the beginning. This administrator, Inversiones Rosarito, IRO, didn't just take a cut of the budget. They also own 40 condos and 8 commercial units in the same building. And with the HOA policy in place, they were able to insure their own properties, and name themselves the beneficiary. But wait, it gets worse. The insurance policy listed Banorte Bank, not the owners, as the first in line to receive compensation. Why? Because Banorte gave a multi-million-dollar loan to the same administrator, Aero, using some of these properties as collateral. So in the event of a disaster, Banorte gets paid first. Not the 231 condo owners funding the policy. Let that sink in. Meanwhile, owners were told they had to buy separate insurance for their units, because the master policy supposedly didn't protect them. Even though the policy's own documentation said it did. And here's a big red flag: it is risky, more expensive, and if not reported properly, it can be illegal to insure the same property twice for the same thing. That's called insurance fraud. Aero claimed they never received any payouts. But in a December 13, 2023 email, their own CEO admitted, the insurance company has approved the damage repairs. So which is it? No payouts, or secret ones that never showed up in the HOA's income reports. Because when owners reported leaks or damages, they were told, you're on your own. Let's break down the numbers. In 2024, Aero secured a policy from Zurich Insurance for $124,000 per year. That's extremely high for Mexico. Why so expensive? Because the policy covered 271 condos, a parking structure, all common areas, and 8 commercial units, which, by the way, were all owned by Aero. And those commercial units, they carried the highest cost in the policy: warehouse, laundry, party room. Example: their warehouse was insured for $951,000. Building coverage and $2.5 million in contents. Meanwhile, a one-bedroom condo was only covered for $60,000. Building and $12,000 contents. Fact: commercial insurance costs more than residential. So why were all owners, most of whom don't own commercial units, paying for that? A group of owners got an independent quote with the same coverage for condos and common areas, but excluding the inflated commercial coverage. The result? $46,000. That's $75,000 less than what Aero was charging. Coincidence? Or something going on between Aero and the insurance provider? Back to Banorte. In 2021, a $3.88 million loan was issued to RB5, a company owned by Hugo Torres, also the owner of Aero. The loan was backed by property within the condo hotel. And here's the kicker: nowhere in the HOA assembly records is there any approval from owners to include Banorte as a beneficiary on the HOA's master insurance policy. So in 2024, while owners thought their fees were protecting their homes, they were actually securing a loan for Hugo Torres and protecting Banorte's financial interests. Is this legal? Or a massive case of administrative fraud? After owners started demanding answers, Hugo A. Torres responded. On March 17, 2025, he emailed owners saying they'd found inconsistencies in coverage, pricing, and beneficiaries, and promised to correct them before the next renewal. He even said the new policy for 2025 to 2026 would name owners as beneficiaries. And it does. Sort of. The new policy lists owners or co-owners of each condominium, but still keeps Aero's companies at the top as beneficiaries. That's not what owners were promised. It should say clearly, the sole and exclusive beneficiaries are the association of condominium owners and/or individual owners of each unit. In the same email, Torres claimed that Banorte would be removed from the policy. Yet, in the final 2025 to 2026 document, Banorte is still listed as the preferred beneficiary. Why? Maybe they can't remove Banorte. Maybe the bank requires it due to outstanding loans. But if that's the case, what about protecting the actual condo owners? In past years, owners were forced to buy individual policies. They were even denied damage claims. Yet, they were told this master policy was covering them all along. In fact, the contract clause read, minimum of $500,000 in general liability. RB Condo Hotel Administration will request annual proof. So shouldn't owners be reimbursed for those unnecessary policies? Torres also promised to remove the commercial units from the HOA-funded policy and said Aero would absorb those costs. But has the HOA been reimbursed for the years of overpayments? He said new quotes would be obtained. But none have been presented publicly. He claimed they've never received payouts from Zurich, but has Aero ever collected without telling owners? Have owners been charged for repairs that were already reimbursed? No records. No checks. No transparency? So where do things stand in 2025? Aero owns 40 units and 8 commercial spaces, yet oversees the policy that owners fund. The same company controlling the HOA is the one benefiting from the insurance policy. Why is Banorte Bank still listed as the primary beneficiary? And after all these years of the HOA being overcharged for insurance, when will owners be reimbursed the difference? Owners were promised transparency. What they got was silence, contradictions, and shifting stories. Is this just mismanagement, or a calculated scheme? The truth needs to come out. Because this isn't just about insurance. It's about accountability.